The second theme is consumption. You have FMCG ITC that is trading ex-hotel business today. And today is the record date for the demerger of the business as well. In fact, it held a 1-hour pre-open session for price discovery of ITC Hotels. Let's go across to Sajid to know all about ITC's demerger. Sajid, over to you.
That's right. ITC's pre-open, which happened between 9 and 10, discovered a value of nearly 26 rupees on the NSE and 27 rupees on the BSE. And ITC price has corrected to that extent after the special pre-open session. Now it trades at a normal ITC, excluding the hotel business. From here on, ITC Hotels, the dormant value of 26 and 27 will be there on the indices, which is on the Nifty and the Sensex, and it will continue to be there till the company gets listed, which is the hotel company gets listed. By guidelines, it has to be done within 60 days from the date of NCLT order, which was December 16th. But ITC would be doing it a little earlier, my understanding is, because given the fact that ITC is a heavyweight with nearly 4.2% weightage on the Nifty 50 alone, and a lot of global funds have ITC in their passive and active portfolios, and which are linked to MSCI indices or FTSE global indices. And the FTSE global guideline very clearly says that in case of demerger, the company has to announce the listing within 20 days. If within 20 days listing date is not announced, then FTSE can go ahead and drop ITC hotels from the indices, and that would mean that a lot of funds which ideally would want to carry ITC hotels as part of the portfolio, because ITC by weight and by market value would be eligible to be part of these indices, will have to start selling those stocks, so selling the shares basically. So it is expected by Jan 31st. ITC would announce the listing date of ITC Hotels, and till then it will remain dormant on the key indices. Roughly around 50 indices are involved in this in domestic market, which includes 29 from NSE and roughly 21 from the BSE, which is there. Once the listing happens, it will continue on the indices till the time there's a certain guidelines which have been put in place that it will trade for 3 days, and if the stock hits a circuit either upper or lower on the first 2 days, then on the third day the exchange will extend it by another 3 days, and it will continue till the time the stock comes off the stock circuit. The entire trading would be on a trade-to-trade platform, which basically means that it will be delivery-based trade that will happen in ITC when it starts trading. Hiral.
Right. Thanks, Ajit, for getting us the details. In fact, let me welcome in Raghvendra Kedia, founder at Prosperity Advisors as well. Raghvendra, good afternoon and welcome to the show. Before I even head across to you with regards to where ITC goes, one quick question in terms of markets, because clearly we've seen a downtick that's come in right now. Though we are off flows, two reasons that people are picking up is profit booking ahead of the earnings season, and secondly, the China virus that has made its entry into India. What is your read and what are you picking up from the markets right now? Is it the virus or is it profit booking ahead of the earnings season? What are the markets reacting to?
Good afternoon, Hiral. Broadly, we think that the overall correction and the sell-off in the market is driven by many factors. Prime most important is this scare of the China virus getting into a bigger epidemic or a pandemic. It's like burnt once, cautious forever. So the market participants, especially the longs, would prefer to sit on the sidelines and see how this development of the spread of the virus unfolds. There has been some concerns in terms of back of a moderate earnings season on the back, and upcoming earnings season we expect to be at best on a moderate level. So there is some profit booking ahead of the result season. There is also a concern that a US-China trade war or some sanctions, once Donald Trump takes into effect this January, there could be some kind of pressure on the exports from India also. So that also is a negative rub-off. Plus the US interest rates going up have seen the FPI flows slowly slowing down into India. So broadly, it's a global macro which is actually denting the Indian story. Broadly, the virus, the interest rates going up in the US president coming in, Donald Trump. So, and on the very lighter note, the earnings season is on the bottom of the list. But yes, we believe that the sell-off would continue to levels of another 2 to 3% in the index. and banking and auto would be among also the sectors which would see some selling pressure going ahead as well.
Another 2 to 3% kind of selling that could continue in terms of markets. And coming to you with regards to ITC, what's interesting over here, Raghvendra, is the discovery price for the hotel business at 26, where the street had an estimate of almost 130 to 300 rupees per share. How are you, reading the discovery price with regards to the hotel business, and what is your view for the two entities now?
Let me start with the big ITC. Every company which has a very complex business structure trades at a discount, and ITC was no exception. So now with this demerger and spin-off of the hotel business, ITC broadly becomes a FMCG major, and that could see some fresh buying from FMCG funds into the company. Even in the hotel business, we could see some pension funds or insurance companies which earlier would not buy ITC might be willing to buy just the hotel business. So we believe that once the ITC Hotels is listed, that could be a great buying opportunity for anybody to pick it up and hold it for a long-term perspective, as the overall hotel industry stocks are going very good in terms of occupancy rate, average room rentals in India. So ITC Hotel continues to be a buy once it gets listed. Moving to ITC, we still believe that it is cheaply valued versus its peers. If you compare it with a Hindustan Lever, a Dabur, or a Britannia, it is on a P multiple of 27, it is half the valuation of Hindustan Unilever, which is at a 50 plus P multiple. So still there is a headroom for ITC to outperform. And considering it's a safe bet, FMCG defensive play, we believe that ITC in a 1 year horizon can see levels of around 520, 530. So that's another 17 to 20% upside in ITC from current levels of 450.
All right, so that's the view coming in on ITC. I think it will be interesting to watch out for once the business update also comes in on ITC.